Well, good day, all. Ira Epstein, and here we are with your financial market wrap-up, and this wrap-up is for the evening, as we're here now on Tuesday, and this is the 25th of September, 2025, getting on to 5:50 p.m. Central Time. You know, yesterday I gave you my talk where I saw momentum being lost in the markets. I haven't changed my opinion. The stock indices, I see that, and I see it in the gold market being lost. It's a big problem, I think. Does that mean that we're not going to keep going higher ultimately in the stocks? Not what I'm saying. This leg of the upside has run itself out, is what the momentum is saying. Could be wrong, but that's what it's saying. And in the gold, I realize it's up $10 tonight, but gold is starting to act similar to that. Now, maybe there'll be an event, maybe there'll be a war, an attack. You know, NATO's getting ready to shoot down Russian incursions. You never know what's going to happen. But barring that, I'll show you this. I already showed it in the gold report, so you might want to go there and take a look and see what's going on. You need a dramatic gain tonight to regain the confidence in the momentum of the gold chart as a chart. Forget people thinking. As a chart, measurable in order to say, nah, this was a one-day event. I'm not seeing it that way at this point. On the energy market, we know what's going on. To a degree, you've got Russia. Ukraine is successfully hitting their infrastructure for oil, and the question is really how much oil is being taken out of the market. And come Sunday, Iran is going to get the next level of sanctions put on them because they're refusing to negotiate on the Western terms of a nuclear deal, not Iran's terms. And if Iran wants that to hit them, fine. That'll take more oil off the market. It's turned the oil market around to a degree and given that market a bid. The dollar has roared. Nothing more you can say other than 8 days ago, 8 calendar days ago, the market was down to new lows. It's now come dramatically back up in the marketplace. And interest rates, which if you look at them, saw their low yield 8 days ago when the Fed cut rates, have completely reversed that, and they have been climbing day after day. Not dramatically, but if you look at the yields, what they're doing, they're not going down. They have been going higher, which is a problem. Mortgages are trading, the way I looked at it today at noon was about 6.3 to 6.35. Remember, they vary throughout the day, but that is up 5 to 10 points from the 6.25 they were a week ago at this time. So something to consider. We've seen home builders getting hurt as the market comes on, so things you've got to pay attention to. Now, tomorrow morning, what you're going to get is the personal income spending in the PCE index for August. Comes out at 7:30 in the morning. Economists are looking at that as up 0.3 month to month, and the spending is seen up 0.5 month over month. So don't know what more to do other than to tell you that's what they're looking for. University of Michigan, and I want to use the word final. That is what it is. It's the final September consumer sentiment. You get a prelim and then a final, and that's due tomorrow, and they're looking for it unchanged. The reason I said final is because GDP, I'm not going to go right here to the jobless yet, GDP was full of surprises today. Normally it's a market, you get the final number, it's a tenth or 2/10 either side. That's not what happened. Every category got better in GDP. And in jobless claims, we just heard from the Fed, they want to get ahead of the curve because the labor market's weakening. It's weakening so much that jobless claims fell to, I think, the lowest number of the year. You heard me, of the year. Here we are already in September, and that's the number. That's not weakness, folks. Somebody's holding on to these people, and the claims, they'd be going up if people couldn't find jobs. You may not believe that, but I do. And continuing claims fell. So where's the argument there? Now, upside momentum is being lost in some markets. Let's talk about that for a minute because it's important. So let's go to the stock market. On a closing basis, you're up 0.6 for the week. I'll take that. It's not a loss. That'd be an all-time high. But here's where the momentum loss is starting to take place. And what the market's got is you still have the pattern of higher lows and higher highs. I think you can see that. The market challenged today, Wednesday, the 18-day average of closes. That's normally where markets try to find their footing. So that is a good part for the market, not a bad part. The market's backed away sharply from the upper Bollinger Band after having a literal tear to the upside as it kept hitting it. But here's what bothers me, and I've circled it for you. You've lost the bullish momentum. Now, where could the market go? That's the trick in the S&P. It doesn't have to go anywhere. You're at the objective. It was lost when prices were above the 18-day average, but it's lost. And when you lose it, the next step is you become overbought. Overbought conditions resolve themselves by the prices either typically going sideways to lower. Sometimes they immediately turn around and they start re-embedding again. I don't see that right now as the case. So I'm going to declare the market's lost upside momentum. When I come over to the NASDAQ, you don't think that's taking place? Now, if we back off, I don't know if it'll let me now. It's not going to let me back it off. But be careful here. The objective, if the market falls and doesn't have a dramatic move to the upside tomorrow, is the 18-day average at the 24,405 level. You've lost the reading in the Dow. You're instantly back down. You can see where it lost it right through here as well. That lost the reading. That's not bullish. That's a market that is now also, with this break, took out the last break low. What else in the Russell? You lost the bullish embedded reading and you've fallen back. So I'm going to go back to my statement. The upside momentum has been broken. That does not mean you're bearish yet, and the word yet may not even matter. It just means you're no longer the bull you were. And markets have to readjust. Now, the two weakest weeks of the year are often the weeks of September, the last 2 weeks. So we have to get into next week. This sort of fits in with a pullback. It also fits in that you weren't weak in August. You certainly weren't weak the first 3 weeks of September. How many new records did we set? But now late in it, we're seeing that profit taking or selling, whatever it might be, hitting the marketplace, and you should pay attention to it. In the DAX, the key, and I've said it over and over, you had to get over these highs. Otherwise, the market could break back, and it did. It broke right down to the Bollinger Band. It's not oversold yet. It could drop a little bit more, but it's getting to the point where some short covering should show up. Take a look at what this market has done since the 17th. A week ago today, all it's done is fallen in the 10-year. When you fall in the futures, you're adding yield, not subtracting yield. You're adding yield to the interest rate sector. And people say, oh, that's not the case. You know, the short term's where the Fed's at. You're adding yield, doing the same identical thing there. Then I look at the dollar. You think the dollar index, if you look at this, is anything but rallying? Come on. This market had its break on the 17th, and all it's done is picked up and gone to the upper Bollinger Band where the resistance should start showing in. But what's the trend? Higher lows, higher highs. If the dollar's going up, what's the euro doing? It's falling down. It may go tomorrow or this week, 116.87 to 82. The combination of the 100-day average and the Bollinger Band. But there's nothing left bullish on this market. And the British pound has been in nothing but trouble since we saw the Exchequer, Ms. Reeves, come out and just tell you all the problems they're having. It's a nightmare that suddenly unfolded right in front of them. This market was doing great until that budget deficit came out, and it was, dramatically higher than they were looking for. And they've got all these new tax laws kicking in. It's gotten ugly fast. Now in Bitcoin, how's Bitcoin responding to the higher dollar? Getting smashed. It's gone from literally the upper Bollinger Bands right here, the 119,000 level, and it just got to 109,000 roughly. So the market has just dropped back dramatically, $10,000. That's not for the faint of heart, that's for sure. Then we come to the energies, which many traders, I was in that camp, thought that we were going to get a glut. But the reason you're not getting it, I explained at the beginning of my oratory. It is because of Russia. It is because of what the market expects with now all the big sanctions coming back on Iran. That cuts supply in the near term. You're overbought. You're against the Bollinger Band. I'm certainly not screaming, go out and buy the market. But it's on everyone's mind what's going up. Same thing in WTI. Now, it could be time, by the way, in Brent, that I'm going to look tomorrow. We might want to be switching to the December contract already. I'll look and I'll tell you tomorrow when we do this. In the heating oil, higher lows, higher highs. I told you that's the one market I want to keep open, that on the next breaks, consider a buy in the marketplace. And in nat gas, if everything else goes up, this gets pulled to a degree. And that's what's happening. It's void of a trend. You have a higher high, lower low pattern. I don't see anything you can do with that at this point in time. So I hope this has helped you and explain why I talked about the loss of momentum. Traders of mine that are my subscribers in the morning, I sent them today the TV interview I did yesterday. And I was talking about just this before it's all unfolded. And I was saying how I'm seeing this loss of momentum and what's going on, and momentum often leads price. And I think that's where you're at right now. The worst it is you've come down, you hold. For the bears, that's the worst case. The best case for the bears is this momentum gives you the first, maybe in the stock market, 3 to 5% correction, which I don't recall the last one we've had. These breaks have been so shallow in nature. We'll see who's right. Right now, my work says be neutral. I'm Ira. You have yourself a great evening. I'll catch up with you all in the other videos tonight or in the morning subscriber videos. Take care.